Okay, right. Let's unpack this. Welcome everyone. This is our deep dive into today's pre-market analysis, fresh insights for August 20th, 2025. We've taken a whole stack of sources, quite a comprehensive report actually, and we're here to pull out the most important nuggets for you. Really, our mission is simple. Give you that shortcut to being genuinely well-informed about what's happening in global equity markets right now. And the initial vibe is definitely a distinct risk-off posture. Investors seem hesitant, looking for safety, but what does that really mean today? Maybe what are some surprising facts driving it? So starting off, U.S. futures, they're indicating a lower open. This follows the pretty sharp sell-off we saw in AI-related tech on Tuesday, and that sentiment just cascaded, didn't it? We saw Japan's Nikkei close sharply lower too. So how should we, interpret this for the tech sector specifically?
Yeah, it's fascinating actually, because it's not like a uniform panic, right? It seems more like a targeted repricing of risk, especially within technology.
Targeted repricing. Okay.
Exactly. So investors are looking again at those really high valuations, particularly for companies built more on, let's say, future potential than current profit.
Yeah.
It feels more like a healthy correction, perhaps, not a catastrophe.
Mm-hmm.
So, for instance, you mentioned Japan's Nikkei. It fell 1.5%. And that was really driven by a rout in semiconductor and chip equipment names. Think Advantest, Disco Corp. They were directly hit by the weakness we saw in the NASDAQ in those exact same areas.
Wait, that's a really key distinction then. Less about the tech itself failing, more about the price maybe catching up with reality.
Mm-hmm.
But what's interesting, as you say, is the nuance here. Because while some speculative AI names, I'm thinking Palantir, PLTR, they're plummeting, right?
Yeah.
Over 9% pre-market. Valuation worries, rising short interest,
Right.
people betting against it. But like you hinted, it's not all bad news across the board for tech.
No, precisely. Not at all. We're actually seeing a pretty clear flight to quality.
Flight to quality, okay.
Yeah. Look at Intel, INTC. It's up almost 7%. Why? A significant SoftBank investment.
Wow.
And Palo Alto Networks, PanW, it surged over 3%. They beat earnings estimates and raised their guidance. So this really suggests, I think, a maturing of that whole tech rally. The market's now demanding proof.
Proof of profitability, sustainable growth.
Exactly. It's kind of like the market saying, okay, enough promises. Show us the actual money. It's a definite pivot from that, growth at any cost idea we saw before.
That makes a lot of sense. Feels like a new chapter, maybe a more discerning one for tech investors. But moving beyond tech, looking at the bigger picture, what other major events are really shaping the market today?
Well, tech is definitely reacting to its own signals. The broader market has its eyes fixed somewhere else today. The Federal Reserve's July meeting minutes, they drop at 2:00 p.m. Eastern Time.
The minutes. Always crucial.
Absolutely critical. And traders are going to parse every single word. They're looking for clues about the committee's conviction, the timing, specifically for that anticipated September rate cut.
Especially with the market already pricing in such a high chance, right? Like 96%.
Exactly. So there'll be a hunting for the degree of consensus. How are Fed members balancing inflation versus growth worries? The precise language could really shift expectations quite easily.
Okay, Fed minutes definitely top of the watch list. And shifting gears again, maybe more globally, we're also seeing these geopolitical shifts starting to ripple through the market, specifically around the ongoing talks for a potential Ukraine peace deal. What's the direct market impact you're seeing there?
Yeah, that's another important angle if you connect the dots. Look at defense stocks. They've been among the worst performers for 2 days straight now.
Really? Right.
Yeah. The stocks Europe Aerospace and Defense Index, for example, fell another 0.9% today. It's almost acting like a real-time inverse proxy for peace expectations. It's quite a dynamic to watch.
Interesting. So defense stocks down could mean peace hopes are up.
Sort of, yeah. And think about the knock-on effects. A significant drop in oil prices, maybe resulting from a peace deal. That could become a really powerful disinflationary force globally, which in turn might give those more dovish Fed members a stronger case for, those rate cuts we just talked about.
Fascinating link there between geopolitics and potential Fed policy.
Yeah.
Okay, one last key area for today, earnings. We've got critical reports coming from big retailers, Lowe's, Target. Why are these so important to watch, even for people not usually focused on individual stocks?
Well, these retailers really serve as a vital health check on the U.S. consumer. Think of them as a kind of referendum on spending trends.
A referendum. I like that.
Yeah, especially now, with household debt hitting a record $17.6 trillion, retail sales are just so directly tied to consumer confidence, to economic health overall. So we'll be watching not just the headline numbers, but crucially, their guidance for the rest of the year. Any comments they make on whether consumers are still resilient or if they're seeing weakness, that'll be key.
Okay, so putting it all together, what's the takeaway for the rest of the day? It sounds like the U.S. session is balanced on a bit of a nice edge, really dictated by those Fed minutes later.
I think so. And that pre-market weakness we talked about, it does suggest the market might already be bracing for a somewhat hawkish tone from those minutes. Maybe anticipating the Fed won't be quite as quick to cut rates as everyone hopes.
Right.
So the big question today, I suppose, is, are these events marking a genuine turning point? Is the market now demanding real fundamental strength, clear profits, or is this just a kind of strategic pause, maybe a breather, before the next big trend kicks in based on whatever comes next?
A lot to think about there. A potential turning point versus just a pause. So what insights are you taking away from today's deep dive? Keep those questions churning in your mind. We'll connect again soon.